Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. Okay guys, so we're just gonna hop right on into the charts. So we're gonna start off looking at the Dixie. So as expected so far, we were calling for this rise to pop on up, and it came into the general failure zone I was looking for, which is right around 103.65, and then this bearish fair value gap here started filling that liquidity up and started making some bear wicks, and now we're finally getting that follow through to break down. And just remember what I've been saying about the Dixie, we're likely going into a squeezing structure, okay? So I need you to ignore all of this over here for a little bit, okay? So just ignore that. Let's deep dive into what's happening right here, okay? So we have made a low here. We did make a high here to match these highs, to actually take these highs here. And now we've made equal lows, arguably higher lows looking from these levels here, but I would say equal lows from down here. And now we're making a lower high. So this high took out previous highs, and now we've made equal lows to a slight higher low. And it's likely we're going to make, after this lower high, another higher low, which does what? It creates that squeezing structure, also known as a triangle of some sort, okay? So why this is important is because what's happening here is we're getting a short reprieve on the pressure from risk, the pressure that's going to be hitting risk on assets. So risk off assets, namely tech, etc., have been doing extremely well all throughout this time here, including crypto to a degree. We'll get into that once we touch on Bitcoin. But over this period of time, as we were consolidating in here, finally getting that move down, we finally are getting some pressure off of the risk on assets. So we're getting some time to shine. The US indices are up, but it is going to be temporary because we're likely going to make a higher low somewhere within this imbalance here, this trend up, and then from there look for another pop up, and the probabilities increase very high now after making a potential higher low here of this daily downtrend line being retested and most likely being broken through to eventually lead to the monthly bearish fair value gap. So we are in the process of a short-term upswing in risk on assets in general. Of course, there are exceptions. We'll touch on those. But we are going to rue the day if we get too bullish too quickly, okay? We want to be bullish now, but we want to, again, transition bearish when it's time. It's not time yet. We want to make sure we're ready for it. The squeeze here, the entire time we're in this squeeze, potentially, okay, is going to be more bullish on risk on assets than bearish. But the moment we start to break out and show that decisive move up to go after the daily downtrend line is when the party ends for time, okay? So I'm looking for the dollar to make this higher low structure. So I am looking for a little bit more downside. Where it will stop is to be determined. My guess would be somewhere around the top side of this consolidation here, and then we'll look for signs of a low pivot to then lead to another leg up. Okay, let's take a look at the Dow, see what's going on there. So the Dow has, again, been following the general path, had a beautiful, nice consolidative drop, nice grind down into these liquidity zones, and then we are rounding up, and we had a beautiful impulse back on the 4th of June, or 2nd of June, I should say, and now we're looking for potential continuation after a slight pop down, something like this. We may just get it now. That's definitely a possibility, but in my opinion, we're probably going to see a little bit more trading here, just for a little bit, maybe a day or two more. So potentially this week we might kind of trade around here, and then start of next week we'll get another leg up. The odds of us getting back towards these highs up here are pretty high, so coming back towards like 34,400 is where I'm looking for this to get to pretty much come back and test these high wicks again and try and tap into this bearish fair value gap zone up here again. Okay, so we are looking very bullish in the short term, and again, this coincides with the dollar looking pretty bearish in the short term. So we want to see that continuation to the upside over the next coming days to maybe early next week, especially if the dollar is going to have that slight drop to make that higher low structure. Okay, so overall going as well as planned so far, as we've mapped it out. Next is the S&P. So let's take a quick look at the S&P. So nice pop up again, very beautiful move up, actually coming in towards these high wicks here. Now didn't take the wick here, but it is threatening it. We'll see if it has that continuation. Now we are in a bit of a consolidation here, so we go down to like the 4 hour, let's say. So you can clearly see we are in a consolidation, but notice that this consolidation does have a bit of a downward slope to it, right? And if you have been following my recaps, I've said over and over and over, whenever you deal with something that has popped up, right, popped up dramatically, and then has a grind that tends to veer to the downside, okay, holds a general shape, what you are looking at most of the time, against all probabilities, is that you're looking at a bullish consolidation, okay? So more of a bull flag structure. So if you see something like this, what you're looking for next for a bullish continuation is something like this that has a veer to the downside that is then squeezing to then pop up and then break out for the next leg. Okay, so that's what we're potentially seeing here on the 4 hour. So I do think the S&P will have more upside as we go further into the week, pretty much tomorrow, and then also into next week. And again, it coincides with a weaker dollar in the short term. And if it does break up, we want to see these highs get taken out, get grabbed, the buy side liquidity getting grabbed, and pretty much coming to fill this fair value gap right here. So we want to see this fair value gap get filled, tap that black line, and then we'll likely see some weakness come into the S&P around there, and that will probably be around when the dollar, if we're correct in the structure we're seeing, will make somewhat of a higher low to then have a leg up, is when the S&P will probably be up here to then make a leg down. Next is NASDAQ. So NASDAQ, same story, but unlike the other two, unlike the Dow and the S&P, far more extended comparatively to them. Now, I'm not saying this is parabolic. I'm just saying when you're relative towards the S&P and Dow, this is going to be much more extended by the nature of it pretty much being wholly exposed to the tech sector. So that's not to be a surprising point. But yesterday was quite an interesting day for the NASDAQ, right? Because the tech sector has been just so hot of late. Anytime there's a slowdown or profit taking, it's going to be way more dramatic than it would be on like the Dow and the S&P, because there's just been so much buildup in the NASDAQ and in tech in general. Now, this indice is somewhat looking bearish here because of this bearish engulfing candle, but it is generally holding this zone, and I expect it to hold this orange zone for the time being, again, as the dollar is looking to find that next low pivot. So we could just be trading on top of it like this, or we can trade within this orange zone, but either way, I do not see these lows getting taken out anytime soon until the dollar makes a high pivot, starts to make a low pivot, and make its way up to start a move towards a high pivot. Okay, so we're not there yet. I am looking more for a consolidation that's going to lean towards sideways, or pretty much immediately, either tomorrow or Monday, assuming the dollar doesn't find a low by then, we just start taking these highs out and we come after the next leg up, which is this fair value gap right here. So let's actually pop that right on the chart here. So this fair value gap is going to be of major demand to get to for the NASDAQ. So right there, very small. And then if that gets taken out, then we're looking for these highs here to be targeted and essentially tap into this imbalance here. And there's a small fair value gap right there as well. So let's actually just pop that on the chart so we can see it together. So there you go. So we are coming into the next zone here. And actually, look at that. We actually did tap into that fair value gap and wicked right off of it. So that's why it's super important to keep this stuff on your chart. So even I didn't have that on my chart, but beautiful rejection off that. But again, it doesn't look like the price action, at least right now, is insinuating that we're going to have a continuous fall, when you look at it in tandem with the dollar. And if we do break up, then look for a move back towards the 15Ks, which is pretty incredible. Okay, pretty incredible. Next is oil. Let's see how oil is doing, how oil has been performing. So oil's still within this blue zone, and just like I've been saying with the dollar, there's a major zone of support. It's going to stay in here for a while, but we keep getting these Saudi Arabia, OPEC cuts, right? So cuts are coming. We got a cut here, we got a cut here. So, Saudi Arabia is going to make its moves to make sure that the oil price is going to start to go up just solely off demand, and supply is going to start to wane. So I don't see them stopping supply cuts or export cuts, whatever. It's going to continuously happen for probably the rest of the year and maybe going even into next year. And that's going to force oil up. Okay, it's going to force oil up as demand grows, and it will definitely grow. So keep your eye on it. Again, if you're in the Lemon Garden Swing Trade Service, you know I recently started a position into the U.S. oil ETF. So I am getting ready, you know, I'm preparing for a pop-up. So I'm looking for this to eventually pop up, but I'm also looking to accumulate that position as we continue to trade in this zone. So, you know, again, I'm bullish oil. My bias has not changed. Nothing fundamentally has changed for me to change my opinion as of now. So I'm still looking for upside, but I do expect significant consolidation within this zone. But once that's finally done, we are going to look for significant, I mean very significant upside. Okay, so just keep your eye on oil, and in my opinion, watch for some upside. Next is gold and silver. So gold and silver looking pretty strong. It's incredible observing these. Now it did get very close to my first target zone. It wicked just above it. So I'm looking for about 1930 to about 1890 to be the first major zone. But so far, gold has held very well. I mean, it's held these lows right here. Again, just like super impressive how this has been playing out. I still do think that as it consolidates here, it will eventually find the weakness to break down further. Now, what we are likely seeing, because the dollar is, you know, weakening out, is you're going to get gold to do something kind of like it's been doing like this, and then you're going to see it start veering up, in my opinion, depending on how long it takes for the dollar to find that low pivot. And then once it veers up, the dollar veers up, and gold has maybe made some slight highs here, it's going to probably make a macro lower high. You're going to see this break on down, most likely, to this zone. And then we'll have to watch price action in here. But in my opinion, this zone will just lead to another similar characteristic of just a rising structure to then lead to another breakdown. And ultimately, these equal lows down here, the sell side liquidity down here is going to be the ultimate target, in my opinion. Okay, so we'll see how this plays out. I've been saying this kind of like over and over. But, you know, this is the most probable path, at least in my view, for now. Unless the dollar is going to get extremely weak, break the structure, and just go down, then we're looking at gold just resetting here and likely going to break up to make new all-time highs again. So again, we're just going to have to wait, be patient and wait. That's the only thing we can do. But so far, it's been generally moving as expected, but this has been impressive to watch. Next is silver. So silver, again, also having a wonderful pop-up, just like with gold, and is really respecting the levels. Now, I haven't even updated these fair value gaps at all. The main reason why is because they are overlapping generally with, you know, support zones, zones of interest. So there's really no point in taking them away so far. But right now, what is silver doing? It's popping into this huge bearish fair value gap for silver. So let's actually take these off here, so it's very clear what I'm talking about, the fair value gap I am speaking of. So this fair value gap here, from this big drop on silver, is what's being tapped into now. In my opinion, you're going to see silver probably trade a little bit further into this, but then most likely fail off of it to break down again to this rising trend line, which is destined to break for sure. It's not something that's meant to hold for much longer, for the long term, and then look for it to break, you know, back towards 22.5 and then sub 22.5, going probably down to like 22, so down towards the zone, and really looking to come into this fair value gap zone and this small little consolidation here and start trading within there. Okay, now let's take a look at Bitcoin, see what's going on with Bitcoin. So we got some interesting stuff coming out of the crypto world. So we got the SEC just throwing lawsuits left and right, hitting Binance, hitting Coinbase. They're all suing, you know. So it's been very, very hectic. And, you know, everyone's super bearish, right? You know, the world's ending. A bunch of coins are being labeled as security. And, hey, you know, I don't want to downplay this. Maybe, you know, it's definitely not a joke, but I don't take it too seriously as of right now. I always follow the charts, so I definitely will follow what the charts are saying more than what any news article is saying or whatever official's saying. So if the charts are telling me to be bullish, but the surrounding ecosystem of this marketplace is telling me to be bearish, I'm going to be bullish. So that's my perspective. If you disagree with that, fair enough. So, you know, what I'm about to say, you may disagree with, you may say I'm wrong, and you may be right. I want to make that very, very clear. I do not claim to always be right. I often find myself to be wrong, but in the end, I have found following the charts for myself to be the most consistent way of making money, and so that's what I do. Okay, so in my opinion, Bitcoin's bullish. Okay, so like Bitcoin looks more bullish than I would have expected by now. If you've been following my recaps or you're in the Lemon Garden Discord, if you're not, make sure to join. You'll find the link in the description. Or you've just been following my my videos or my Twitter. You know that I've been fairly bearish, and we had been short on most crypto for quite a while. But I recently started to close out the shorts, taking our profits here and there, and then transitioning long. So we're completely 100% long in the Lemon Garden on crypto. So when this news started to break out, I didn't find it to be that concerning, mainly because Bitcoin's structure looks bullish, right? So let me explain exactly what I'm looking at here. So let me expand this out. So just looking at the daily, remember guys what I always say. I just went over it this video, but I'm going to do it one more time. Okay, so when you're in like an uptrend, okay, so this is clearly an uptrend for Bitcoin. Okay, at least as of right now, right? So higher lows are consistently happening. Okay, impressive impulsive moves up, and then we go into these consolidations. Now this consolidation is doing what? It's grinding lower, right? It's grinding lower after a big move up. So if it's grinding lower after a big move up, what's happening? Why is this happening? So you have to go into the psychology of why is price action doing this? Is this smart money selling, or is this smart money buying? Is retail selling, retail buying? What's happening? So this is my opinion, and we'll see if I'm proven right or wrong. Okay, I've held this opinion over and over. It's how I've been trading for the past couple of years, and it's served me well. But we'll see if this ends up being right. In my opinion, smart money have been buying all down here and even over here. Okay, we have been accumulating all throughout this area, and then as we broke out, smart money has been letting go of positions through here and also through here. However, when they are letting go of positions, okay, and they're closing out their longs, they're also opening up shorts. While they're going down, opening up shorts, they slowly close out the shorts and then start to open up longs. Okay, so let me explain exactly where this was happening. Okay, so I didn't really mark it that clearly. So the place where they start to let go of longs per se, smart money, is usually in rising structures. So rising consolidations like this. Okay, rising consolidations, and the reason why it's rising is because retail dumb money is trying to buy up out of hype, out of FOMO, and they're slowly being called in by the smart money. So when retail dumb money wants to buy something, the smart money, they have to sell something to them, right? So they are slowly letting retail grind price up, but the truth is smart money's pulling price up. They're making sure the books aren't too heavy. They're making sure that retail can see some short-term price changes in their direction, lull them to sleep, and then finally, when the smart money's done, they've let go of their positions or they've opened up, bear positions, they'll let the breakdown happen. Again, breakdown happen, okay? And same thing happened here. Rising structure, okay? Rising structure, and then breakdown, all right? And in the breakdown, the smart money starts to slowly transition long, okay? It's a slow transition. It happens over and over and over. So this, to me, this behavior, when you've popped up like this and now you're doing this slow grind down, is telling me that smart money is starting to slowly open up long positions, and then come with a bear story of SEC sues everything, which may be true, and I'm not saying it's not not important story. It's just a prime time to get into a position where majority aren't, and then just cause a move up. So in my opinion, I think we're going to see Bitcoin in the next month or two going back towards 30,000, potentially to the mid 30,000s, and that's where you'll see smart money dumping their bull positions and then start transitioning short, or just getting out of the market. And that's my plan as well, right? So if you're in the Lemon Garden swing trade service, swing trade service, it's been an absolute killer, right? It's been an absolute killer. So and the way it's been a killer is simply by just doing exactly what I'm saying, which is just slowly transitioning, right? It's the way we've been able to be this consistent, and I see this potential path happening, and this is going to lead to, in my opinion, the best opportunity to take profits off longs and then start building out really high probability, really profitable shorts. So I put my money where my mouth is. I'm fully long on the market. The people following the service, I think they're in some of these positions with me, so they're long on the market, and we'll see how this plays out. But overall, I'm pretty confident in what I'm seeing now. Can Bitcoin go lower? Absolutely. I could definitely see. I've been calling for like 25, 24K. So even before I closed the shorts, I closed it early because a lot of the altcoins were looking bullish. So I just figured to take my money out. But we are in the zone of where I was always saying like 25 to 24,000. Where we're looking at potentially a low pivot to then make a high pivot. So we're already in that zone where it's attractive to potentially start flipping long. Right? Now, if we do break, let's say we do break 24K, where are we coming? Well, we're coming probably towards the low side of this consolidation and tapping in to this fair value gap here. So let's take off some of these doodles to clean this up, make it a little bit easier to see. But hopefully it's making sense what I'm saying. I try to hammer that in. You want to know the psychology of structures, because it's not about the structure always playing out. It's just the idea of understanding what price action's telling you. So if you get into the habit of that, you'll start to be able to read it kind of like a storybook, and it becomes a lot less threatening, a lot less of a guessing game, and you start getting the idea of probabilities more so as well, because that's how this all operates. No matter how often you see something, it's going to have a failure rate, but it's also going to have a win rate, and you'll be able to understand it better the more you can recognize it in real time. So if we were to break down, going towards the 24,000s, this is the first place that I've been looking for, potentially for Bitcoin to get to, if we should get there. Now, the grind is making that very interesting. I don't know if we'll actually get there. This grinding structure is going to be pretty challenging to see that, but we may still. But if we were to lose that, where are we coming next? Well, we're coming towards the bottoms down here. Now, this doji down here, this little wick here, this pivot, is going to be a major hold level. Okay, it's going to have to be. All right, now we could end up seeing price break under there and then pop up, but if that does happen, that really weakens the structure we're looking at. Okay, so we want to see potentially, we want to see price break up from here, or at the very least holding this bullish fair value gap to then break up higher. Because if it does come all the way down to this low pivot, what starts to get built? Well, take a look. You'll break down, and then pop up. The pop up is very likely because you're taking the sell side liquidity, and then you're going to make a lower high from these highs, rounding highs, rounding left shoulder, and then you got a rounding right shoulder that could then lead to new lows, or at least threatening these lows down here. Okay, so if we want another leg up, we cannot see this happen. Okay, if this does happen, the probabilities drop dramatically of these highs getting taken out within the same leg up here. Okay, we'll have to do something like this potentially to happen first, and then something higher, or even just take out the lows completely. Okay, so I don't see that being the most probable path right now, but it is definitely a path. So we have to make sure we're aware of that. Okay, so overall, I'm very happy with how everything's been performing. Yesterday was a very wild day with everything dropping, but in my opinion, I see it all as an opportunity to just get into good long positions, build out positions, and then hopefully our patience will be rewarded, our caution will be rewarded, and we'll be able to slowly take profits from the longs. And what will we do, guys? If you're in the swing trade service, you know already what I'm about to say. We're going to slowly transition short. And if we continue to do that like we have been for over a year and a half now, all the way since back here, if we do that, we're just going to end up with this sort of major loss off a 5% position, but other than that, green all month. Okay, so we're just going to keep going. All right, guys, that is it for the recap. Again, if you have any questions about what I've said here or about anything else, make sure to leave a comment down below. I'll do my best to answer your question. Or just say hi. And also, if you did like the content, maybe give me a like, maybe a subscribe, a share or two. I definitely appreciate that. But most of all, if you have not joined the Discord and you're interested, please check out the Discord's totally free. You'll find the link in the description below. You can meet a ton of new people there. Great people. Everyone has different experience levels when it comes to trading. Also, if you're interested in any of the services, swing trade service, tutoring service, day trade room, check out the Patreon or the Discord. They both have the information you might be interested in, and I'd really, really love to meet you and see you in the room. All right, guys. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.